Welcome to the National Real Estate Cafe, where you get your daily dose of real estate market updates with Don Getling and Gino Franti.
All right, so where the heck is the economy going?
Wah,
So,
wah.
you watch us hopefully on a daily basis. You see from this report, this is a really important report that's come out because we always talk about trends. And if you notice, there's a trend since September of last year, Gino.
You stole my thunder, Don. I was just going to say, this is not just one report. Look, there's actually a trend going.
Right.
And it's not a pretty one, actually. So when you look at the trend, you see that the New York Manufacturing Index has been slumping for quite some time now, and that's going to affect the economy. Granted, not everything is manufacturing, but it's a good thing to take a look at.
All right, so here's another really important chart. We're going to leave this one up for a little while now because the Fed is trying to decide whether they're going to raise interest rates in the next meeting on December 16th. And a lot of it has to do with inflation. So the CPI index that you see here is one of the many reports that monitor inflation. But the key point is we're at 1.9% as of right now, year over year. And the target for the Fed is 2% or below. So if you look on this chart, if you look at the green squares, you're going to see from November of 2014, we had no inflation. It was
Zero.
0.0. So the problem is if November of 2015 shows any inflation, and it's supposed to be up 0.2, then we're going to be at or above the target inflation numbers for the Fed, which could actually give them some reason to look into raising interest rates.
Yeah, and then so if I actually prefer the Fed raises rates because right now we've had the back and forth and the what if and if they do and I think they will and then they won't, and all the speculation creates nervousness in the marketplace. And as you saw last week on this next chart, you'll see that we kind of had like 2 weeks of really bad interest rates. And now we've got a little bit of an improvement. Rates are coming back just a little bit because they were oversold, as typically happens with rates. Bonds had gotten oversold. There have been some buyers in the market. Now, with the bad news we've received, I would anticipate that it should be doing a little bit better. So
I thought so.
The market's still very cautious.
Right. Now, remember, when the Fed raises rates, it is not long-term rates. The chart we just showed you, pop that back up again if you would. This is for long-term interest rates. That is the mortgage-backed securities, actual people buying mortgage-backed securities.
As an investment for yield in the long term, right? These are 30-year bonds. So who buys these things are large institutions like CalPERS and CalSTRS and very big retirement funds that have hundreds of millions of dollars to invest.
And the key thing is if the Fed raises rates, it's short-term interest rates. We're talking on your credit cards, we're talking on your auto loans, and so forth. So if the Fed does raise interest rates, it doesn't mean that long-term interest rates will go up. In fact, they could even improve, believe it or not. So we're going to keep you updated with all the numbers leading up to the Fed's next decision because it's a big one. You heard it right here in the National Real Estate Cafe.
So speaking of numbers, don't forget to text 58885. Text NREC to the number 58885. NREC to the number 58885 for more great info.
Find out more on nrecafe.com.